In today's weekly Forex forecast, we are talking about the DXY, the euro, the pound, and also gold, as markets remain relatively choppy. However, where today closes could actually dictate what we get next week, and I'll have all the details in today's video. Now guys, if you want my help with your trading, including seeing my trades live, also VIP-only videos, real-time market updates in Discord, also full access to the course, check out the link in the description of this video for 85% off lifetime access. If you're on the website, hit that join VIP link. All right, guys, so looking at the DXY first, we have the daily time frame here and really choppy markets so far over the past few weeks. I mean, really since the start of August, these markets really just haven't gone anywhere. I mean, yes, the market is kind of trending lower here. However, it started to really just chop around this 97.70 area and making it, very difficult to trade. Because on the one hand, earlier this week, it did look like the DXY had reclaimed 97.70 to potentially push back here within the range. But of course, with that ECB, the press conference, we did get the dollar rotating lower and closing back below 97.70. So what is going on here for the DXY? So in times like this, guys, it's always best to kind of back out a little bit, look at higher time frames. And for that, if we look at the monthly time frame, this is the channel we've talked about, right? We've got the 2011 low back here. So lows back here, we've got highs off of resistance up in this area. And of course, over the past few months, this is the area the DXY has found support at. So right around 96.60. At least that's where the level comes in right now. Now, here is the tricky part though. If you look at the daily time frame, again, the market's just chopping around. So what do you make of this? And this is where moving to the weekly time frame really pays off, because if you look here at the weekly, right? Yes, the market has been very sideways. We talked about this in yesterday's video, how the market, I mean, look at these upper wicks, right? The market has just been very sideways in this range. However, looking at 97.70, even though the daily time frame has been chopping around this, you can see where the weekly has held above. Okay, so we've got this support level down here at 97.70 on a weekly closing basis, and we've got resistance up there at 98.60. So what this is going to come down to, in my opinion, for the US dollar index, as we head into the last few hours of today's session, also the weekly close, what this is going to come down to is where the DXY closes this week relative to 97.70. And you can see where the market, as of right now, is pressuring that level as I make this video. So this, guys, is going to come down to where we close this week in relation to this level, in my opinion. If we start getting a weekly close below here, then that confirms a breakdown, and we probably get that push down there into that 2011 channel support, right? Also, this wick back here, notice this wick right back here in late June. So on the weekly time frame, a lot of times when you get long lower wicks like this, you do get the market partially filling them in. And look back here, right? We've got all of these upper wicks, and every single time the DXY has filled those in, at least partially. Okay, so that's what you tend to get because these areas are imbalances, in this case on the weekly time frame. And furthermore, you've got these poor lows back here, these unfinished auctions that we've discussed at 96.62 and 96.69. So this area back here, if we go to the daily time frame, I'll show you exactly what happened back here. Okay, so in fact, we're going to go to the 30-minute time frame since that's really where TPO shines. Okay, time price opportunity. This is the indicator that I've really fell in love with just because it matches so well with the way I trade price action. You can see back here off these lows. The way this works, guys, is that the market profile at these times on these lows indicated that sellers were not finished, okay? And what you tend to get with poor lows like this is if a market does break below a key support level like 97.70 on a weekly time frame, okay, then what you tend to get is the market actually retracing into these areas because markets love to retest poor highs and poor lows. So these areas down here, because we have not seen a retest of those lows yet, these are open for business, so to speak. However, at the same time, though, you need that weekly close below 97.70. So for now, guys, this really is no man's land. I mean, there's no way to know whether we're going to get the US dollar pushing higher or lower next week. And you're never going to know what's going to happen, but there's no way to even know what's likely here from the DXY until we see that weekly close, until we see whether or not 97.70 holds up on a weekly closing basis. So for now, the jury is out, right? The jury is out. Market remains very sideways. Hopefully, in the coming weeks, we get some better price action because really, it's just been very, very choppy over the past 5 or 6 weeks. So I would love to see this finally resolve itself, either get the push, down here into this poor low, that key support, that confluence of support down here, and then finally get the bounce from there, or we get the market closing above here and just targeting 98.60 next week. But either way, like I said, I would love to see the DXY finally resolve this chop that we've seen over the past few weeks. Okay, so let's move along to the EUR USD, and I'm only talking about 4 charts this week just because really, to be honest with you, it's difficult to find anything more than that. Even these markets really aren't producing much in terms of A+ opportunities. So look at the EUR USD, guys. And by the way, if you are enjoying this content, be sure to subscribe to the channel. Also hit that like button. So EUR USD daily time frame, you can see that the market, is holding above this February trend line that we've discussed in recent videos. So kind of an odd trend line in the sense that these lows back here did not touch the level. However, if you draw this level from that February low, you can see that over the past few months, we have had some really nice touches off of this level. So I've been talking about this one now for the past few weeks. And what you'll notice here is that we had this low right back here, this low through here, and also this low from Thursday, okay? So going into the ECB, this was the level that got tested, and that's exactly where we saw the euro bounce. Now, speaking of, since we're here, right, I just mentioned how long lower and upper wicks tend to get filled in, at least partially. Look at this one back here on the daily, right? This long lower wick right back here, and the euro actually took off right from there. Look what happened. We returned right back to it and partially filled that in. Okay, so perfect example, guys, of how these high time frame wicks like this tend to serve as imbalances for a market, and markets do tend to partially fill those in. Okay, so looking at the euro now. Okay, so 117.20, this area back here, you can see all these highs through here. Now, this became really, in my opinion, kind of confusing here this week because on the one hand, you had this bearish engulfing candle, right? The body of this red candle engulfed the body of the previous candle. And then on top of that, on Wednesday, you actually had the close below the low from Tuesday. So what that meant is that you had a bearish engulfing candle. You also had the euro confirm it with this close. However, that ECB press conference, guys, really threw this market for a loop because instead of obviously rotating lower, breaking that February trend line, we got the euro pushing back above 117.20. Okay, so again, just really all over the place with the Forex market right now, with the exception of gold, obviously, which has been a runaway trade, which we'll talk about later in the video. But for now, guys, the EUR USD remains very indecisive here. Now, very much like the DXY, what we have is the weekly time frame here holding below this 117.20 area. Okay, so even though it is chopping around on the daily, you can see where this has been resistance here for the euro. However, the market is also holding above that February trend line. Okay, so you just have this stalemate right now with the EUR USD. Now we have a poor high up here off of the 118.10 area, which you can see the wick right back here. This could become a potential target for the euro only if it gets above 117.20 or so on a weekly closing basis, though. That is going to be key. Now, in terms of downside, okay, what it's going to take here, in my opinion, to really get downside from the euro, because keep in mind that we do still have a poor low back here, unfinished auction off of this low, right around 115.64. We've also got that single print from way back here off of this low around 114.40. However, the challenge right now for the euro with targeting these areas is that look at Thursday's candle, right? We have the market bouncing from this February trend line. So in order for the euro to target areas like this down here, you're going to have to see it get below that February trend line. So far, it hasn't done that. And again, if it closes the week convincingly above 117.20, then we could see that push into the 118 area over the coming days to target that poor high up there around 118.10. Okay, now lastly, before we move on to the pound here, I do want to mention, we talked about this in a recent video, but I also want to mention this because it is so significant for the euro. You can see that going all the way back here to the 2022 low, you have this ascending channel, which was tested in 2025, okay, as resistance. So this area up here, guys, is going to be really critical, really interesting to watch over the coming weeks. Now, one thing to keep in mind, though, is that before the euro gets up here, so like let's say we get a rally here from the euro over the coming days and we do get that push up into 118, the issue here for the euro to target areas like this up here, the top of that channel, is that this level in the DXY, okay, that 2011 channel support down here, this is going to likely come into play long before the euro gets all the way up here, okay? So that's something to pay attention to. Really keep an eye on the DXY and that 96.60 area if we do get the euro and the pound pushing higher. Okay, so speaking of, let's move along to the pound here. And this market also obviously very sideways. Theme of the week here for these markets, really theme of the month. And you can see where so far we have the market just holding below 135.80. So this resistance area back here. And so far it's also now holding above this area around 135.40. So it did close above this on Thursday. And you can see where we got a bearish rejection candle here. And we did get the close below 135.40. Now we're back above it. So very, very indecisive market here for the pound. Okay, so looking at this market, it becomes very clear because 135.80 is really the line of the sand here for the pound, right? This is resistance. You need to see a daily close above here and preferably a weekly close above this to really target some of these higher areas. Now we have unfinished auctions up here at 136.18. We've also got one at 136.80, along with all of those single prints from all the way back here in July. So if I move to a 30-minute time frame, just to map this out so you guys know exactly what I'm looking at here on GBP USD, you can see at the back here, if I go all the way back to, let's see, July, right? The very first part of July, this was actually July 1st and July 2nd. You can see where this was a very aggressive drop here from the pound. Okay, so a very aggressive drop. The market came back up and we got a partial fill of this drop. However, these candles back here on the 30-minute time frame, like this right here, for example, you can see that off of this low, right? You had this range that built up. You had the expansion out of this range. The market came back here. However, it did not fully test this low back here. Okay, so on that expansion, right, there is an imbalance, a single print right up here around 136.86. Now you've also got two more up here in this area. So 1.37, guys, could become really interesting if we do get the break above 135.80. But again, as I've stressed in recent videos, you really have to get that, at least at a minimum, a daily close above here and preferably a weekly close. Okay, a weekly close would really start to confirm things, in my opinion, if we get that close above here, but really a daily close above this would also do for a push up here into these areas. Now, alternatively, if we get the pound closing right back below here, 135.40 going into Friday's close, then of course, that would start to look more bearish towards some of these areas here next week. Okay, so really the jury is out now, guys, on what we get next week. But 135.80 remains key resistance. You've got this short-term support coming in now down here around 135.40. All right, so very back and forth market like the DXY. Like I mentioned there, I would love to see the pound finally get out of this range and finally give us some momentum to work with here in September, because it really has just been a very difficult market to trade here, especially this past week with the market just chopping around in this tight range. All right, so moving on to gold, which is a completely different beast because instead of being sideways, it has broken out of this range that we saw for most of 2025. I mean, this took a long time to play out. Now, one thing that we did talk about during this range, though, is the fact that the market was carving higher lows. So even though the market was very sideways, and we discussed this, weeks ago, is that what you'll notice here, if we go to a daily time frame, what you'll notice is that during this period, so I'm going to take this off for now. Okay, you can see that all of these lows back here, right, very sideways, but it was carving these higher lows into resistance. And that was your indication that we were going to get that bullish breakout, which we've clearly had here over the past few weeks. Okay, so right now for gold, guys, here is what I'm watching for next week. Now, obviously, this is a runaway train. You do not, in my opinion, want to be trying to short this. I mean, sure, we could get a pullback, but with this kind of momentum, with this kind of breakout, you really do not want to be on the sell side here, in my opinion. Now, looking at the weekly time frame, obviously, you have this channel from 2024 with resistance coming in up here. Difficult to tell exactly where, but it could be up here in this area around 3,800, okay? Now, as far as pullbacks, because you obviously don't want to chase this market either. So if you're on the sideline, or let's say you just took profit, right, and you're wondering where to get in, one area or a couple areas here next week could be factors is off of this high from right back here. So again, single prints, guys, looking at this range back here, you had the expansion out of this range, this expansion point right here, okay, right at 3601, this is now an imbalance, a single print, okay, and it's just below this low right here. So what we could see next week is if we do get a slight pullback from gold, which, eventually we are going to get some dips because that's just the nature of a market, even when it's bullish as gold right now. But when we do get that dip, this is going to be your key support, okay, 3601. Now you've got another one down here at 3563, which again, same thing, expansion out of this range. You can see this expansion point right here is now your imbalance, okay? So you've got two imbalances back here. Markets are often drawn to these areas, but more importantly, for an uptrend like this area could become key support, okay? So you've got key support down here, you've got key support right here. Okay, so in my opinion, if we do get the pullback next week, this is going to be your first key support to watch, potential dip buying opportunity there. If we get the deeper retracement, then that's also a potential spot to look for gold longs, okay? So just my opinion, as always, not financial advice, guys. But as far as resistance goes, I've got these levels marked here just because they are psychological levels. Technically, all levels are psychological, but these are big round numbers, 3,700, 3,800. Obviously, if we were to get it to 4,000, that would be a significant level for gold. But we are still, a ways from marks like that, okay? So really, I mean, you got this area around 3,700, 3,800, also the top of that channel is resistance, and key support for gold comes in next week at 3,601, followed by 3,563. Okay, and lastly, I mean, could we get a pullback all the way back into the top of this former range? We could. There are single prints down here in this area. We could potentially get a move all the way back down here in this region, but really, I think with this kind of breakout, I would be surprised if we got that. If bulls want to stay in control here, you really wouldn't want to see gold dropping back here, especially aggressively into this area, right? I mean, really, ideally, you should see the market stay above here and just continue higher up here towards some of these areas, potentially the top of that channel. Okay, so there is the chance that we get a deeper retracement here. But again, I don't see that as a likely scenario right now, especially with how weak the US dollar looks, okay? So that's it for today's video, guys. I hope it helped. If it did, be sure to subscribe to the channel. Also hit that like button. And don't forget to join us in VIP Discord for real-time market updates and also get my trades in real time. Have a wonderful weekend, and I will talk to you guys again on Monday.